Hello everyone. Welcome to the Business Wealth Show. It is lovely to have you with us today. For those of you that don't know, my name is Annette Ferguson. I'm CEO of Annette & Co, UK-based accounting firm. I'm a chartered accountant, certified profit first professional and financial strategist, and we help business owners take home lots more money from their business for them and their families to enjoy. On today's segment of the Business Wealth Show, we are speaking about the difference between accountants and bookkeepers. It's a question that many people often wonder: where does bookkeeping start? Where does accounting start? What does it look like? How do they work together? How do they interact? Do I need a one-stop shop for everything, or can I have separate accountants and bookkeepers, and all those things? So I'm going to be covering all of those off in today's session. And as always, if you have any questions along the way, do make sure you ask them in the comments. I will make sure I respond. And if you are asking questions on the replay, I will loop back and reply to you. So do not worry. Now, if you are watching on the replay, give me a hashtag replay in the comments so I can come back by and say hi later on. And if you are tuning in live, give me a hello. Let me know that you are here, whichever platform you happen to be watching on today. I would love to know that you are tuning in with us and that you are attending this episode of the Business Wealth Show. So like I said, today I am going to be covering off accountants versus bookkeepers. Don't worry, it's not some massive fight between the two of them, but where does one start? Where does the other start? What does it look like? How do they interact together? And using a one-stop practice for everything and what that means. So first of all, I'm going to start with what the definition of kind of bookkeeping really is. And bookkeeping basically involves the recording of income and expenditure, the transactional recording of income and expenditure of a business, the reconciling of bank accounts, the reconciling of merchant accounts, Stripe accounts, PayPal accounts, all of those things. And in some, but not all cases, it involves taking that into a monthly profit and loss account and balance sheet format for the business owner to use. Now, bookkeeping is done for a couple of reasons. So one, first of all, to ensure that the books and records of the business are kept up to date. That's a UK legal requirement, that the books and records of your business are kept up to date. So you tick that legal requirement box by having bookkeeping done on a regular basis, ideally on a monthly basis. But also off the back of that, it produces information that you can use in your business to make decisions. A profit and loss account and balance sheet usually is what is produced off the back of it. Not all bookkeepers, incidentally, will actually give you those reports. Some may just do the reconciliations in the programs that you are using, but many will produce a profit and loss and balance sheet, or the program they are using will have the ability to do that. And you will get that as a monthly report, which will enable you to make decisions on your business off the back of that. Where that is basically where bookkeeping stops. Now, if you are VAT registered as part of bookkeeping, typically your bookkeeper will also usually prepare and submit your VAT return on a quarterly basis as well. Because when they are doing the bookkeeping, they need to do it in accordance with the VAT rules and law. Now, this is a big reason why when you're looking at the person that is going to be doing your bookkeeping, you want to make sure they are qualified. Anyone can call themselves a bookkeeper. Many people often use their VAs as bookkeepers, but you need to make sure that if you are doing that, if you're using a non-qualified bookkeeper, that they do understand VAT law, that they understand and have read the VAT legislation. You need to make sure that they are also, by the way, if they are a VA that is doing it, if they are not registered to a professional body of any level, including any of the bookkeeping professional bodies, then they are required to register with HMRC as a bookkeeping provider for money laundering purposes. That is a legal requirement. For anyone who is not part of a professional body, needs to separately register. So again, make sure that if you are using somebody who is non-qualified, who is not part of a professional body, you'll need to check with them that they are registered with HMRC for money laundering purposes. So, because by the way, if anything happens in your business and there's a money laundering breach and you are using somebody that is not registered, you're going to have some problems there. Okay, so just to cover that off. But anyone can call themselves a bookkeeper. Incidentally, anyone can also call themselves an accountant. Neither of those words are protected words, which can frighten people a lot when they hear that, but neither of those words is protected. So again, you want to make sure that any accountant you're using is also qualified. It's very important that both your bookkeepers and your accountants are qualified, because that means they have to keep up to date with legislation. It means that they are audited by their professional bodies. It means that they have reached a certain standard and they have a code of ethics. And it also means that they have professional indemnity insurance in place should anything go wrong. If you are dealing with somebody who is non-qualified, either a non-qualified bookkeeper or accountant, they don't have to keep up with current legislation. They don't have a code of ethics to adhere to, and they don't have to have professional indemnity insurance in place. They could just disappear off the face of the planet and leave you in the lurch. So make sure that whoever you are using for both those things are qualified. They are qualified individuals. You can ask for their qualifications, and you can also check the professional bodies as to whether they are qualified once they tell you what qualification they have. So there is a way for you to cross-reference that and cross-check it to make sure that you are comfortable with the level of qualification that they have. So back to where the bookkeeping is. So as I was explaining, the bookkeepers will typically take your information from its raw form. So they will take it from pieces of paper, from emails, all those things, and they will basically translate that. They will reconcile it fully. They will make sure that all of your transactions relating to your business are transactionally recorded. Like I mentioned, that is one of those things is a legal requirement of the Companies Act to make sure that you keep up-to-date books and records of your business. The other is that you can get meaningful management reports on a monthly basis for you to make decisions on. You'll be compliant with VAT legislation as well in getting your books up to date on a monthly basis. One thing, though, that you will not get from a bookkeeper if they are doing that is a tax estimation. So bookkeepers are not tax qualified. They are not qualified in tax legislation. And that therefore means that they cannot provide you with what your corporation tax will be, or your personal tax will be, or even an estimate of what that is, because that is out with the scope of bookkeeping. So we move into the realm of accounting, and accountants are more qualified than bookkeepers. They are tax qualified, and they are also qualified to produce annual accounts. They are more qualified in the legislative aspect of it, and also the case law aspect of accounting and tax work. So any questions on business structure, that would be an accountant. Any questions on share issuing, those kinds of things, that's an accountant. Any issues around any of the taxes, that's going to be an accountant that you're going to want to reference for that. And then how to declare stuff, how to disclose stuff, that again is all going to be on the accounting side of things. So what typically happens is that if you have a separate accountant and bookkeeper, your bookkeeper will prepare stuff to a certain stage, usually to what we call a trial balance stage. And then what will happen is the accountant takes over from there, and the accountant will do things like tax estimates or tax actuals. If it's the year end, they will produce your year end accounts. They will ask and answer more complex questions around the business's finances and how that works. Now, nowadays, many people use a one-stop shop, use one place to do all their numbers, business numbers stuff. It makes a huge amount of sense to do that because all the data is in one place. All the data is together, and therefore you can they will internally speak to each other. Now, that is not saying that if you have a separate accountant and bookkeeper, they won't. They very much can speak to each other. That's not a problem, but it's not a flow of information between the two. It's a handover rather than a flow of data. So it often makes sense, and it's typically usually much cheaper for you to go to a one-stop shop and have everything in the one place so that all your bookkeeping and your accounts are being done in one place together. So I hope that makes sense, explaining the difference between accounting and bookkeeping, where one starts, where the other ends, and the interaction there between the two. Because someone in your business needs to do the bookkeeping work. Someone in your business needs to do the accounting work. Now, that doesn't have to be an accountant or a bookkeeper, as I mentioned before. That could all be you. There is no legal requirement to actually use a qualified accountant for your accounts work. You could do it yourself. You could do your annual accounts, your corporation tax, and your personal tax returns all on your own. There is no legal requirement for you to use an accountant to do that. But you do have to remember that there is a reason that chartered accountants go through so much training, have to keep up to date with relevant standards, and have a code of ethics in place. It is because things change all the time, and it is because we need to make sure that we're up to date with all the relevant laws. And if you're not willing to do that yourself, then it makes sense to hand that to somebody else to do. The same with bookkeeping. With bookkeeping, many people just get their spouse to do it or their VA to do it. Again, that is okay if your spouse or your VA is willing to keep up with the relevant legislation, that they understand and have studied the VAT laws and those kinds of things. That's completely fine for them to do that. But if they are not keeping up to date with those things, typically what then happens is that the stuff is prepared in your bookkeeping package. Your accountant comes along and has to redo a ton of stuff, and it ends up that you get charged more for that than you would have done had they all done it in the first place. So there's a cost benefit analysis that only you can weigh up in your business on that, as to which route you want to go down. I'm certainly not saying that you can't have somebody else doing your bookkeeping. You absolutely can. And we do have clients that do that. But typically it makes a lot more sense for a business owner to hand off the financial stuff in a oneer, and therefore get the overarching support. Now, when it comes to asking questions, communications, some accountants will charge by the hour. Some will charge you a fixed package and a flat fee. We have monthly calls as standard for our clients. There are various different models, and depending on the firm, that is how you'll work with the firm themselves. And so that will depend on what level of support you believe your business needs, what level of support that you want in your business as well. So I hope that makes sense. If you have any questions around this topic, then do let me know in the comments. I am happy to answer those. We are speaking today, of course, about the difference between accountants and bookkeepers, what each of them does, where their responsibilities lie, where their responsibilities sit. So do let me know if you have any other questions, if there's anything else you are wondering about. I'm just pulling up the comments as well. Somebody on Facebook, I can't see their name, is saying, why are we learning about what bookkeeping is? I am just explaining the difference between accountants and bookkeepers, what you might want to consider when you are looking at getting either involved in your business, and what that might look like for you. That's what we're talking about today in today's session. So I don't think I see any other questions coming in or any other queries coming in. If you do have any, let me know in the comments. I'm happy to answer those. So do let me know if you have any questions, if you have any queries. I will answer those. But if you do not, thank you for tuning in to this episode of the Business Wealth Show today. I appreciate your time. I know it is precious. Thank you for spending some of it with me. I hope it has been enlightening to you if you are making decisions about your financial team in your business. And I will be back same time, same place next week. Thanks for tuning in, everyone.